Hello traders, my name is Tomasz Wiśniewski and I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report. So let's look for decent trading setups, let's look for decent trading occasions, and I have to tell you that we have quite a lot of them, and almost all, if not all, our setups from the previous days are working out. Which is pretty good if you ask me, and let's see if those movements that we anticipated will continue. But first, as always, we need to check the macro calendar, because you can see today is quite interesting, especially for the euro. We already had data from Germany, which came slightly worse than expectations. Difference is not big. But the main event will be ECB interest rate decision. So interest rate decision from the European Central Bank. As you can see, we're not expecting any fireworks here. We do not expect any changes in the rate. So the most important thing will be statement and press conference, which will be shown in 3.5 hours. And this is the most important data on Thursday. On Friday, what do we have is the GDP, so gross domestic product from US, and core personal consumption expenditures also from US. This will be the most important data. For those trading on Japanese yen, watch out, because overnight we'll have inflation from Japan, so also an important data for the Japanese yen, one of the most important data. Let's check the charts. We start with the American dollar to Japanese yen, where we had a beautiful head and shoulder formation. So left shoulder, head, and right shoulder. This formation was very dangerous for the buyers, because it's usually bringing us a further slide. We got a slide, but it was stopped on the ultra important support. This support was created, first of all, by 61.8 Fibo. Second of all, by those lows, obviously. But the most important line here was the long-term uptrend line, which was connecting higher lows since March. So this line was defended, and as you can see on the daily chart, the price is drawing a hammer. Hammer is a bullish candlestick. When the hammer bounces from the long-term uptrend line, it usually brings us a further upswing. Further upswing may come also from the fact that this can be considered as a false breakout, and this can be considered as a failed head and shoulder pattern. So false breakout, failed pattern, hammer on an uptrend line can bring us a strong buy signal. Quite the opposite we do have on New Zealand dollar to Japanese yen. So what we have here is active sell signal, because the price broke the neckline of the head and shoulder formation. So this is the neckline, this is the head and shoulder formation, left shoulder, head and right shoulder. In addition to this, we had a flag formation. We broke the lower line of the flag. And now this comeback here is just a typical pullback. So price testing the recent support as a resistance. That's it. The sentiment is negative because there is a long-term downtrend, so short positions are more probable. We have this formation, we have this resistance, so everything looks bearish here on the New Zealand dollar to Japanese yen. Euro to British pound. Here we have ultimate sell signal with only one problem. This problem is statement and press conference from ECB, where everything can happen. So actually this setup, not the setup, but the technical situation does not work. It is not relevant, and nobody cares about the technical situation when we do have a press conference from ECB and the statement. because traders will only trade that. They will not trade lines and dots in that particular time. They will trade only this fundamental event. That is why trade few hours before. Obviously, if you want to trade this and close the position before, fair enough. But the thing is that it's a long-term setup. It's on H4. So it's not wise to trade something which is on H4 to close it 2 hours later. If you want to close position 2 hours later, the proper time frame is like M5 and 15. What do we have here on Euro to British Pound? I'm gonna tell you that despite the fact that we do have ECB in 2.5 hours, because it's just a nice technical setup. What we have here is a head and shoulder formation, maybe not the prettiest one on the market, but still. So we broke the neckline, which is a negative sign, and we had a typical pullback, so the price is testing the recent support as a closest resistance. This test is done with with a double top formation and with a flag formation. Flag is promoting a further drop. So we do have here also a bounce with a double top from the horizontal resistance and from the mid-term downtrend line. So this bounce, the second bounce, is really significant and strong and a legitimate sell signal. Only if not the fact that we have ECB data today. So ECB data is a problem here. ECB press conference, not the data, is a problem here. So I'm staying away from this setup. But on the paper, looks good. Yesterday we had a decision from Bank of Canada, and as you can see, after this decision, Canadian dollar got stronger, and this was in line with the price movements. Because there was a long downtrend, the price created a flag, bounced from the downtrend line, and went lower. You can see these setups, those setups are pretty similar to each other. Look. Downtrend, flag, downtrend. Downtrend, flag, downtrend. Downtrend, flag, downtrend. So it's happening, guys, whether do you believe it or not. There is interesting situation here because here we have a neckline of this head and shoulder formation, and here we have a neckline of this head and shoulder formation, left shoulder, head and right shoulder. So the price being here is really a good sell signal on the Australian dollar to Canadian dollar. I see a great chance for a further slide. This is my outlook for this instrument. Now gold is fighting for this breakout of the 38.2. We had first test, we had the second test. That's kind of negative that we had those two tests and they both resulted with a drop. But the thing is that we can have another one and another one as long as we stay above the lower red line. The breakout of the lower red line will bring us a sell signal. Now Australian dollar to New Zealand dollar. Downtrend, correction, downtrend, correction. So here we do have a breakout of the downtrend line, of the horizontal support 1, of the correction quality pattern, and we are breaking the second horizontal resistance. So this actually can bring us a buy signal. There was a beautiful sell signal here, but now the price is canceling it. So I'm lucky that I didn't enter this position. Euro to Swiss franc. So I was telling you about the strong sell signal here when the price created a double top formation of 38.2, where we had a shooting star, another candle with long head, not necessarily a shooting star, but still. Then negative candle, but the price is locked now in the sideways trend. So we have a hammer and a shooting star again. They are not relevant because they are not present on support or resistance. The thing is that sell signal is no longer here, and sales will come back to even thinking about the sell signal when the price will break the yellow support. As long as we stay above the yellow support, there is no sell signal here. And yes, here that signal was nice, but here we lost a bit of technical situation here, and I don't see necessarily a good trading option here. New Zealand dollar to Swiss franc, that is interesting because it's a head and shoulder formation, support, broken support is being tested as a resistance, and according to the price action rules we should see the bounce from this line and a further slide. The thing is that the setup is not the strongest on the record because we are also under the influence of this inverse head and shoulder formation, and this can easily result with a reversal. So, like for example, let me show you this. Here, chance for a further slide on Australian dollar to Canadian dollar is like 70% for bears, 30% for the upswing. On the other hand, here it's like 51 to 49. So that's not the best option to go with this kind of setups. You should always go with the setups that are very, very clear. Obviously, there are no sure bets on the market. The price can easily go up or down. But the trading is game of probabilities. So you should always assess the probabilities and go with the setup which is more probable, not possible, because everything is possible. In this situation, the game of probabilities are more or less equal. We have kind of a bullish influence, kind of a bearish influence. In Australian dollar to Canadian dollar, that's full bearish. The downtrend, formation, another formation, breakout of the supports, fundamentals, everything is pointing south. So I'm really not surprised that the price, when the price will go lower. There is this resistance here. I think that the price can like make a correction towards those highs and then go lower again. Next one is New Zealand dollar to American dollar, where I do see a proper sell signal. So what is happening here is a downtrend as well. The price making lower lows and lower highs. The price recently bounced from the downtrend line. The bounce from the downtrend line was not random, but the price from the bounce from the downtrend line was created with a head and shoulder formation, left shoulder, head, and right shoulder. You can see that I can see a lot of head and shoulder formations on the market, but I'm not necessarily looking for them, especially looking for them. I just see it, and when they are present, it is easy to spot them, and they are quite popular. In this formation, we got a blue neckline and the price broke the blue neckline. Also, the price broke the midterm uptrend line here. Downtrend correction, downtrend correction, downtrend correction. Most probably a downtrend because we bounced from this, broke this, and there is a formation. Only thing stopping me from going full bear right now are those two pullbacks. From today, looks like a double bottom formation, and from this the price can go a bit higher. So definitely in the long term that's sell, but in the short term I would wait for a higher price because it seems like in the short term the price should get higher. Euro to Swiss franc, that is beautiful setup, which maybe I will jump in today. What is happening here is the price broke the horizontal support and then used that as a resistance. We use that as a resistance in a flag formation. Flag should result in further drop because that was the trend before the flag. Bounce from the resistance, broken support, and now a typical pullback. So the price can get like here, and then from this point we should go lower. So this is very nice setup, and it has high chances for probability. It has high chances for success. I'm sorry. British pound to American dollar, also very good situation here. So, and we are talking about that yesterday. You shouldn't be surprised that we said that that there is a bearish sentiment. We broke the lower line of the triangle, tested that 2 days ago as a resistance, tested the horizontal resistance as a resistance. Yesterday it's just capitulation from the demand, and today we do have a correction, but this is just a correction, and this correction should result with a further drop. So I don't know how deep this correction can be, like till here, or that's the end, but the long-term sentiment remains negative here. American dollar to Japanese to Canadian dollar. So before the data, it was all looking good. So we can see that fundamentals can crush even the best trading technical setup, because fundamentals do not care about the technical analysis. And this is what happens. So inverse shoulder formation, left shoulder, head and right shoulder, broken neckline here. Neckline is later used as a support with a flag formation. Flag is bullish because it was created after an upswing. Everything here was pointing north. So bounce from the support, inverse shoulder formation and a flag. It was going good, but then Bank of Canada, Canadian dollar was stronger, boom, and now the buy signal that would be triggered here. We also made this checkpoint here not by accident. We knew about the Bank of Canada, and we said that only the breakout of this upper line of the flag can bring you a buy signal, because the price was inside of the flag and it's a bit too early to open a position. So then breakout of this horizontal support and then a pullback, but after the breakout of this yellow area we should see the continuation of the downswing. American dollar to Swiss franc, that's nice. Bounce breakout from the pennant. They aimed horizontal resistance, they hesitated a little bit, pullback. Another test, most probably will have an upswing because the buying pressure is high. If that resistance would be strong, it would result with a drop, but we don't see a drop right now. So most probably we will have a breakout. See, trading is this simple. Traders just love to complicate this process. I don't know why. Maybe they feel more advanced if it's more complicated, but trading is really simple. So if you do not complicate it, if you make it easy as it is, you get rewarded. Oil is going down in line with stocks. So we broke 23.6 and long-term uptrend line. That was expected here. And the aim is on 38.2 on the yellow area, and we should get there soon. Downswing, correction, downswing, correction, downswing, correction, downswing, correction as well. This correction should end with the breakout of this line. I don't know what it will be at the end, if it will be a flag or a pennant, and it's not really important, to be honest with you, because in a downtrend, when you see a correction, you always go for the breakout of the lower line, and the lower line is established. Now DAX, I guess that the decline in stock market is the most important news right now. Asian stocks reacted very badly overnight after the American session, and today's session in Europe is also quite bad. So winter starts soon and bears will go to sleep, but before going to sleep they are attacking with the full force, as you can see here on DAX. On DAX we broke the neckline of the long-term head and shoulder formation, then we use that as a resistance. So beauty of the price action setup is at finest. Very technical setup, very nice, very clean, and the price should continue to go down. This is the session from yesterday on S&P 500, which ended with a drop like this, and its direct influence on the Asian stocks. What happened with this breakout, with this bounce, is the breakout of the long-term uptrend line, which connects the higher low since November 2016. December 2016, I'm sorry. Let's say January 2017. So pretty significant line, and it got broken. So now the price most probably will decline towards the yellow area. So the correction is happening. And that's the beauty of the old sayings from the trading world. So it is said that bulls climb with stairs, and bears use the elevator. Slowly building, building, building. Boom! This is October. So in 1 month we removed gains from 1, 2, 3, 4 months, almost 5. Pretty interesting, right? Now Nikkei, so this Asian panic here, also not a random place, because we broke the combination of the horizontal support and dynamic support. This support is crucial here. I'm sorry, as you can see, it connects the higher lows since November 2016. So breakout of this horizontal support and this uptrend line brings us a legitimate sell signal with the potential target here below 20,400 points. What is Bitcoin doing in this situation? Nothing. Bitcoin is just moving sideways. So we are in a very tight range between $6,300 and $6,470. That's very unusual for the Bitcoin, and a breakout of one of those two lines will eventually bring us a direction here, show us a direction. And dollar index had a beautiful session here yesterday. Now we just have a pullback, but after this horizontal resistance looks legitimate. So we broke this horizontal resistance, and now we are using that as a support. Price bouncing from the yellow area will be a strong signal to remain bullish on the dollar index. So now we need a quick recap of the situation on the market. So American dollar to Japanese yen, that is rather buy. New Zealand dollar to Japanese yen, that is sell. Euro to British pound, sell, but to watch out for the data. Australian dollar to Canadian dollar, sell. Gold, unknown, but I would say still buy. Australian dollar to New Zealand dollar, that is buy. Australian dollar, Swiss franc, unknown. New Zealand dollar to Swiss franc, still kind of sell, but not strong. New Zealand dollar to American dollar, that is sell. Euro to Swiss franc, that is sell. British pound to American dollar, sell. American dollar, Canadian dollar, sell. American dollar, Swiss franc, unknown. Oil, sell. DAX, sell. S&P 500, sell. Nikkei, sell. Bitcoin, waiting for the breakout. And dollar index, no, not sell. This is buy. So you can see that most of the positions are short positions. Short positions are more probable, but we will see if this will end this way. So thanks guys very much for attending, for watching the daily analytical report. I hope you enjoyed that. In the meantime, you have to visit our Twitter account and our website. But the most important thing is that in half an hour we're gonna have a webinar about trading psychology. And in my opinion, trading psychology is the most important factor in trading. It's the thing that you have to do, you have to know, you have to respect. It's this webinar about the trading psychology is worth more than 1,000 webinars about the trading systems. I mean it. I really mean it. So if you want to be a professional trader, you want to have a trader's mind, because if you're beginning, you don't have a trader's mind, I think you I think you should attend this webinar. So thanks very much. All the best, guys, and see you in a half an hour.